when you sort of begin to look at sort of risks associated with different provider types, unfortunately, dental fraud and abuse, or dental insurance fraud and abuse, occurs at nearly double the rate of the average healthcare sort of level of fraud and abuse. So, when payers look at, dental providers and dental claims being submitted, they're always casting a very, very sort of careful eye over it, just because on aggregate, I'm not saying everybody does this, but unfortunately on aggregate, dental providers represent a much higher risk than your average healthcare provider.
This is the Open Wide Podcast with your hosts, Scott Drucker and Jinesh Patel.
All right, and welcome back, everyone, to another episode of the Open Wide Podcast. I am your co-host, Scott Drucker, here with my other co-host, Jinesh Patel, and our guest today, Hendrik Lai, Dr. Hendrik Lai. How are you gentlemen doing?
Really, really good. Thank you, Scott. Thanks for having me.
Let me introduce you for our audience, for those that don't know you. Dr. Hendrik Lai is a seasoned management consultant and speaker. You have expertise in strategy development, process improvement, performance transformation, 15 years of experience in management consulting, and you've consulted across a diverse range of industries in healthcare, financial services, education, technology. Jinesh and I obviously know you from the confines of the dental world, so healthcare/technology. And you've made multiple appearances on different news channels, speak at a bunch of events, and help your clients through whatever issues they have. And you're a dentist, you're a dental surgeon trained in Australia.
Yep, that covers it.
That sums it up. You have, for anybody watching, you have behind you your current logo of Sage Consulting. By the time this is released, that will be the old brand. The new brand is Viturtal, Viturtal Consulting. And the name is Icelandic. You want to share what that means, where that came from?
Yeah, Viturtal, or Viturtal for the Americans in the audience. It's Icelandic for wise counsel, wise speak. I think it's a nice play on sort of the old branding of Sage. There was just, unfortunately, a little bit of unpleasantness with another one of the Sages out in the market, and forcing a rebrand.
That sounds like legal to me, and I'm already sort of breaking out in hives.
Yeah. It's always like that brand confusion that sometimes can hurt somebody of the other brands. That can happen. It's like Hendrik is Hendrik, but somebody else might be, representing that brand in a different way. And you're either getting the positive and the negative effects of that. So it's yep. I can feel that and wanting to make that move.
But, I think it was definitely high time for a rebrand anyway. So it's silver lining. That's how I look at it.
Where'd you get the Icelandic nature? Was that just something that you wanted to get close to, or is it just an interesting word that you're like, I want to incorporate that somehow because I like what it stands for?
Weirdly, I was walking down a street in a holiday destination here in Wisconsin, very, very sort of Scandinavian, and walked past a beer garden of all things called Staba. And I thought, kind of like this Icelandic, Swedish, Scandinavian sounding name. I'm going to look up how to say wise counsel in Icelandic, and that's how it went. It was precipitated by a visit to a beer garden. So
I will say some of the best ideas come in and around beer gardens.
Well, yeah.
Awesome. So Hendrik, can just kick us off here from the top and walk us through, I'd say at a very high level in brief, how you went from being a dental surgeon in Australia to a business management consultant in and around, but not exclusively, dental in the United States.
Yeah, that's a good question. I've dentistry and how you're taught dental in dental schools is fairly single-minded and sort of very narrow in track, and that you're taught to be a dentist. And I'm one of these people that, I actually never wanted to be a dentist. it was just one of those things that I fell into. Actually, of all things, wanted to be an archaeologist, and I was going to be Indiana Jones and run around, collecting golden idols and getting chased by pygmies. But my parents said, no, you got to get a real job. So I thought, oh, okay, well, I better go get a real job. So went up to dental school and sort of built up a sort of group, managed, and was sort of fortunate enough to be able to exit to a sort of larger group. And that was when I was introduced into the world of dentistry, the business of dentistry. And it was a rude awakening. I thought, I was doing pretty well in my sort of own little world. And then when I was exposed to the much bigger world, where private equity was involved and sort of, other sort of non-dental investors, it was a rude awakening as to how much I just didn't know. I felt that while I was sort of managing different sort of levels of dental offices, I thought I had a pretty good grasp on things, but it really sort of opened up my eyes to, wow, how little I didn't know. And then following that, I actually moved into sort of non-dental. I moved into working for a large multinational corporation that did full scope healthcare. So, they did dental, they did medical, they did pharmacy, surgery, aeromedical evacuations, outbreak eradication, the whole works. And that's when I was sort of introduced into the broader elements around business of, process optimization, process improvement, certification to third-party third-party certifying bodies, etc. And then, I thought, okay, well, I'm getting a pretty good handle on the operations here. So I set up a number of healthcare facilities around the world. Really good experience, got them, built up quality management systems, and then got them certified to the ISO 9001 QMS standards, and then some other elements of, the ISO 17000 standard for occupational health and safety, and ISO 13000 for environmental sort of management. And I thought, okay, well, I think I need to sort of get a better idea of how this all fits in, the operations fits into getting paid, right? So I became eventually what I call one of the most hated men in dentistry. I actually became a C-suite executive at a sort of dental insurance company. So I have a pretty decent understanding of payer-provider relations, not just from the provider side, but also from the payer side. So I sort of, have an understanding of how providers see payers, and also how payers see dental providers particularly, and sort of understand the dynamics which exist there. And I went back to school, got a couple of MBAs, all that kind of good stuff, and then sort of went into sort of general management consulting, primarily targeting sort of strategic management and operations, and sort of worked across a number of different industries with that. Dental obviously is, forms a big part of my portfolio, but we also worked in medical, health and beauty, some oil and gas exploration, some aerospace technology, and manufacturing. But sort of the bones of it is that, ultimately all businesses are there to generate some sort of, free cash flow to either return value to their shareholders or to provide gainful employment to their employees, depending on, the specific culture. So, really the industry is not all that important, but, coming from Australia, relatively small country at the time, when I left, there was only about 18 million people. So, we're talking New York, and there just wasn't as much opportunity for me to, to touch as many lives and add as much value as I could moving to the US. So, it precipitated an opportunity for me working with some clients to move to the US, and absolutely seized it and have run with it ever since.
Amazing. Yeah. I want to double click. There's sort of something you said there specifically about your stint as a C-suite executive in an insurance company, and you kind of broad stroke painted this picture. There's a certain lens through which the payers or the insurance companies see the providers and vice versa. Can you just explain that in obviously in generalization, but so
Yeah,
the audience is on the same page.
understood. I mean, we could probably take a step back to sort of understand, where does the loyalty of the payer lie? The loyalty of the payer doesn't lie with the provider. The loyalty of the payer lies with their member and with their employer/group sponsor. From a payer's perspective, the provider is a vendor. And, you think about the sort of, in your dental offices, you can have a vendor, and, I'm sure Jinesh can attest to this. You treat it a certain way as a vendor, right? And more so in dental, with dental providers, because unfortunately, particularly for payers that offer benefits outside of dental. That they might offer medical, they might offer vision, they might offer dental as well. When you sort of begin to look at sort of risks associated with different provider types, unfortunately, dental fraud and abuse, or dental insurance fraud and abuse, occurs at nearly double the rate of the average healthcare sort of level of fraud and abuse. So, when payers look at, dental providers and dental claims being submitted, they're always casting a very, very sort of careful eye over it, just because on aggregate, I'm not saying everybody does this, but unfortunately on aggregate, dental providers represent a much higher risk than your average healthcare provider.
Why is that?
Why is that? Well, I think it's more of a question for the industry as to why. There's almost a culture, I think, of feeling that, payers aren't giving us what we want, so we might pad some of our submissions, or we might sort of maybe exercise some creative coding or something like that.
Like flirting on the border there with what's legal.
Yeah, well, I think there's an element of that, and I think it's there's a culture, I think, in dentistry of, the payers aren't looking after us, the payers are shortchanging us, they're not paying us what we deserve, so we're going to stick it to them, and the way we do that is to maybe play around the margins of what might be considered to be acceptable.
Yeah. It is a very us versus them mentality. I definitely agree with that. I'm just wondering why dental would be different. Why wouldn't any other physician submitting their claims of things completed or in a contractual relationship, zooming out with a payer, wouldn't feel like rates being squeezed or reimbursement rates being squeezed downwards would be frustrating, and why the same behavior patterns
I think
would be different or wouldn't emerge.
There's probably a few different sort of parts that come to it. One is obviously you hear all the times that dental insurance is not real insurance. It's basically a coupon, it's a voucher, that kind of thing. So versus sort of medical insurance, where once you've met your deductible, you've met your maximum out of pocket, that's it, right? For the year, you get whatever you need to get done, and it's all covered by the insurance company. Whereas dental, it's first dollar benefits. So, or for the most part, in some cases, there's a deductible that needs to be met. But, for the most part, it's first dollar benefits up to a maximum benefit level. And then after that, it's all on the patient. So I think, the difference in how insurance is seen, I think the way that dentists typically encourage patients to utilize insurance or utilize dental services is also somewhat of a challenge. When you sort of consider, people talk about insurance, think about automobile insurance, right? We don't really have in dental any individual risk rating. The guy that's got, or the patient that's got 4 quadrants of periodontal disease has the same premium as the person who's got pristine, dental health. So, again, sort of going back to the auto insurance analogy, if you told your auto insurance, hey, I'm going to sort of use you at least twice a year, I'm going to back my car into the letterbox, at least a couple of times a year, you would be uninsurable, right? Yes. So, effectively with dental, what we tell people to do is, hey, you got to use your insurance at least twice a year. You got to come and get your, twice yearly checkups, prophies, or whatever the case may be. So I think that there's an element of that, And then I think from a sort of broader economic standpoint, the concept of value sort of falls down when it comes to dentistry. So as dentists, we also always want to think we're offering a valuable service. Everyone loves what we do, but I've yet to meet somebody that gets up in the morning and goes, "Yes, I really want to see my dentist today. I'm sort of dying for it." But when you consider the concept of utility value versus economic value, the difference of utility value for dental procedures against the economic value versus, say, medical procedures, the utility value versus economic value. So, and maybe it's a step back to explain what those two are.
I was just going to ask.
So, utility value is the sort of the value that the consumer will derive from your product, your service, whatever the utility that they'll derive from it. Versus the economic value is the value of the next best option, right? So you think about utility value and economic value can change considerably depending on the context. So, if it's 100 degrees outside, the utility value of a ice cold bottle of water is very different from when it's raining and it's 64 degrees. That utility value of that ice cold bottle of water is now diminished. So, but the concept being, for your average dental procedure, a restoration, a crown, even an endo, versus the utility value of the next best option that the money could be put towards, is somewhat lower, or the delta between them is somewhat lower than, say, somebody having a heart attack or having kidney needing kidney replacements versus the economic value. So the utility value of having a heart, having a kidney, that value is considerably higher than the economic value of the next best option, which you could spend your money on.
Right.
So it's a difference in sort of the utility values versus the economic values. The economic values are going to be roughly the same because of the options that are available to somebody needing a heart transplant or needing a sort of kidney transplant, the same as somebody needing a root canal or a crown. But the utility values of having, again, a heart versus having a crown are significantly different. So
Sure.
I think that, really what it boils down to is that dentistry is ultimately discretionary spend. So,
Right.
Dentists aren't competing with other dentists. They're competing with a Mercedes-Benz or, the trip to Mexico or the new iPhone or something like that. And, we haven't, as a industry, perhaps done a great job in articulating the utility value of dentistry versus, say, an iPhone. Or versus a trip to Mexico, or whatever the case may be.
That's a good point.
Sure. I have a ton of follow-up questions, but I've been hogging the stage here. Jinesh, I wanna pass the mic over.
Yeah, I mean, part of this, obviously, Hendrik, is we find you to be a very interesting person in a lot of ways, right? Like, you have a varied background, you have a true provider background, you have a business background, you have a lot of healthcare plus other business experience. One of my questions is all about just that journey that you took from somebody who spent years perfecting and just learning about oral health care and now being more on the business side. Like, which side do you love more? Like, what things do you miss about the dentistry side, that you wish you kind of kept on because now you're in a different phase of your life? And what sides do you feel like you actually enjoy more being on the business end of it?
Yeah, that's a really interesting question. I think, certainly there's the personal touch that you get from, being a provider and being able to change individual lives and, the impact that has on individual people. I certainly miss that, from a provider perspective. But I think, I prefer the business side of things simply because I can touch more lives and impact more people. As a provider, you're only touching the lives of the person in front of you or maybe their immediate family.
Right.
Whereas when you're interacting with businesses, particularly on the scale that I often interact with, you touching 10,000, 20,000 lives in a business, and when people are relying on that business for their livelihoods to be able to put food on the table, it's to be able to sort of make more people's lives better. I don't necessarily think that You can divorce, particularly in healthcare, sort of the clinical aspect and the ethical aspect from the business side.
Right.
And I think in healthcare, it's sort of something we have to keep an eye on. It's not like other industries where you drive for profit maximization. It's really more around profit optimization, and that profit optimization really has to pull in sort of the different stakeholder needs. The stakeholders, they could be patients, they could be investors, they could be regulators, they could even be competitors. But it's you're not really sort of focusing on, or you shouldn't be, at least in healthcare, focusing on profit maximization. It's really sort of striving for that balance and looking to optimize that balance between the clinical and ethical obligations you have, because of your role as a healthcare provider, with the commercial realities that that every business owner faces. I do sort of like the the ability to sort of identify pockets of opportunity in the business environment, whereas in sort of being a provider, it tends to be very black and white, right? It's either you have caries, you don't have caries. This tooth was extracted, it wasn't extracted. It's very, very binary. But so I like to sort of understand that the world typically doesn't exist in a state of sort of ones and zeros, right? It's various shades of gray.
What about like all these learnings from, sorry, Scott, but what about all these learnings on the business side that you've taken on and started kind of providing your clients on the consulting end? When you look back at your dental days and, being the provider, where you're like, why were we doing that? Like, and it's almost like that moment of, who thought of this and why was this our policy? Because now I know more about how these things are done and operate, and we should have totally not done that. Like, what is that one thing that kind of sticks out to you? I feel like that always happens in a reflection moment.
Look, I'll be the first to say that, when I was, a provider, managing and running, offices, I had no idea about even how to read a financial statement. My accountant would come to me, 3 times a year or 4 times a year, put down a couple of financial statements in front of me, put a big X where I had to sign, and I just sit there and sign away and go, okay. I really had no idea what I was looking at. And I think that's a big part of it, is that we are very reliant as providers on the advice, in the same way that patients are reliant on our advice. And in dentistry, as in business, there's varying levels of the quality of advice. One of the things that I sort of see as my light bulb moment is that a lot of dentists, they have an experience of 1, or maybe an experience of 2 or 3 or 4. They have the experience of the office that they were in, or maybe the office that they associated in, and then the office that they ended up buying or establishing themselves. And that's great. That gives you a great depth of experience in that particular context. The problem is when you've got depth of experience and you try to translate that experience into other contexts, unless those other contexts are very, very similar or identical to what you experience, your experience just doesn't translate. So, that's why I sort of really like that business side of things, where, I've had the opportunity to work with thousands of offices. So I might not have as in-depth an experience in a particular context, but I've got enough breadth to be able to translate that experience across multiple use cases. And I think that's the light bulb moment I had, is that, okay, I'm really good at what I do right now, but unless everybody else has exactly the same issues as me, exactly the same setup as me, exactly the same operational concerns, exactly the same payer mix, all those kind of things as me, a lot of what I have and a lot of the experience I have just doesn't translate into anything that's useful for other people.
Yeah, I have a number of thoughts based on a whole bunch of things you said, but if you were to give one kind of piece of guiding advice for better understanding the other side of the table when we're talking about that, back to the payer provider dynamic, what would you kind of guide the providers to understand about the payer side and vice versa that you think is either missing or would be most helpful?
Yeah, I think it's that fundamental concept that the allegiance of the payer does not lie with the provider. the allegiance lies with their member /
Right.
your patient, and
Right.
the sponsor, the sponsor, whether it's the employer group, whether that's or a group sponsor or a third party sponsor, like a pension plan or something similar. So, so understanding that aspect of it,
Right.
and understanding.
Just to rephrase that, the customer of the payer of the insurance company is the company that has that pays for the policy, right?
Mm-hmm.
And the provider is almost like just on the kind of marketplace of the payer in a sense. They're like on the menu of
Mm-hmm.
options.
Yep. The provider represents a cost, right? So
Right.
just like in your dental business, you're doing everything you can to minimize costs. You're trying to sort of pay your vendors less. You're trying to keep payroll at a minimum, and payers are doing the same thing. The reality is that dental insurance is not a particularly high margin game. It's when you sort of look at the breakdown of where dollars flow, it's not a particularly high margin game. You get 71% of every premium dollar, 72% roughly goes to your dental loss ratios to pay benefits. Then you've got roughly a 9-ish% sort of broker fees, when they're utilizing a broker, and then a 2 to 3% premium income tax. So before you even run your company, you're really looking at a possible pre-tax profit of about maybe 18%.
Yeah.
And when you consider the management expense ratio of your average sort of insurance company is about 15%, it sort of leaves 2 or 3% pre-tax profit to actually run the business. So from the perspective of, hey, being such a low margin business, they're doing everything they can to minimize sort of the expense they pay, in that
Mm-hmm.
means rework, that means sort of denied claims. They're trying to actually minimize those, because every time they have to look at a claim and you resubmit the claim, it costs them money. So so understanding the economics of insurance as well. The only reason you see these big dollars is because so many lives are touched.
So I do want to hear then the advice for what the insurance companies miss about practitioners, but I feel like there's this, from the practitioner side, there's this gut reaction, like the dental insurance company is out to screw me, and they just reject out of hand claim submissions and force me to do a whole bunch of extra work and make me jump through all these hoops, because basically they think that fatigue is going to get to me and I'm just going to give up and then not be paid for the services rendered. That's the cynical, I'll call it the cynical perspective of the practitioner. Do you think there's merit to that? And there was just a bill passed, I think it was either Illinois or Pennsylvania, Jinesh, we were reviewing this, where basically they said that if there was a pre-authorization that you'd given for a procedure, you can't out of hand reject the payment claim unless there were very specific exclusions. So there's this lack of trust, I'll say, or cynicism from the practitioner perspective. Is that founded? Is that just?
Well, I think that there are certain payers that have a reputation of being a little bit more challenging to work with than others. But I look at things on aggregate, right? It's if you've got an experience of one, maybe you participate with one or two or three payers in your sort of office. Okay, you've got an experience of three. When you consider all the payers that are out there, you obviously got your big guys, your nationals. You've got your little regionals as well, and then you've got your very bespoke, like your electrical brotherhood, workers union sort of insurance companies. So I think when you start looking at things on aggregate rather than the 1, 2, 3, 4, 5 payers that you might utilize in your office, it really sort of doesn't look quite as bad as that.
The few bad apples spoil the headlines, and sort of.
Well, yeah, it's sort of very similar to the headlines about when a dentist does something wrong, right? It goes and shoots a lion. Everyone knows about it, but certainly not every dentist is going around shooting lions, right? So
I thought that's what all dentists do. After I read that story, I was like, they all just hunt and kill lions?
Yeah, exactly.
As humans, we're obviously programmed to remember the bad.
Yeah,
because you hear about these. Oh, I got a claim rejected for a crown.
Yeah.
Okay, you got one claim rejected. How many claims didn't get rejected?
Right. What on a percentage basis? What are we actually talking about here?
Like most payers strive for a 92% first payment rate.
Yeah.
Good to know.
Interesting. What do most insurance companies or payers miss about the practitioners?
Well, I think they don't necessarily understand the clinical aspect, because just like a dentist reviewing another dentist's work.
That's a super easy answer. I should say, that's a given. What's something else?
Well, I think that there are certain elements that I don't think payers really understand the economics of dentistry anymore.
Interesting.
One of the challenges a lot of dental offices have is that in an average dental office, your fixed costs represent 85 to 90% of your costs. There's very, very small variable costs in there. There's maybe your labs and your supplies and maybe your biologics. There's not a lot of variable costs in there. So I think that payers haven't really kept up with the impact of those fixed costs, and and maybe don't understand the economics around. Look, dentistry requires you to have somebody in front of them in order for you to make money, and ultimately a dentist's currency of trade is not dentistry. A dentist's currency of trade is time. You're trading time for money, and time being a decaying resource is something that every second that goes by, you've still incurred your fixed cost, because it's a fixed cost, but you haven't been able to offset that and reach your decoupling point associated with the revenue aspect. So I think that there's maybe a lack of keeping up with the economics of dentistry, and the economics of what it takes to reach internal economy of scale in your average dental office now.
The super I think interesting perspective and feedback here. I feel like there are two different directions I want to take the conversation in. One is medical dental integration, and that clearly, like, I kind of want to jump off from the obvious differences that you just outlined a little bit ago between medical insurance and dental insurance, and how that whole scenario could play out over years. But before we jump there, I just want to double click on your comment about optimization for profit, and how that in and of itself shouldn't be the kind of North Star metric driving practice, a clinic, or a delivery of care facility. Do you think that is conceptually missed in the context of private equity backed DSOs?
I think the thing with private equity backed DSOs, or any DSO, I think there's a lot of them have very different investment theses. Some are going to be very much, okay, we've got a harvest period. We expect to harvest in 4.8 years, and we want to maximize our return based on what we bought. And then there are some that are a bit more what I call patient equity. They might say, hey, look, we're willing to sort of hold on to this for 10 years, 15 years, and really sort of drive operational efficiency while making sure that patients and providers are happy. So I think I don't think it's necessarily missed in the context of private equity. I think it's a situation where when you've seen one DSO, you've seen one, right? So I've worked across multiple sort of private equity backed DSOs, and worked across multiple non-private equity backed DSOs. Ones that were sort of basically grown through operating revenue and sort of and reinvestment within the business. And I don't necessarily think that that profit optimization versus profit maximization is necessarily lost on private equity. I think that those that have a lot of healthcare in their portfolios understand that. Those that come from maybe working or investing in tire companies or automobile repair shops. Yes, I think there's some challenges associated with that. But for the most part, I think that most private equity firms, particularly those that do have a a background in healthcare do consider the patients to be key stakeholders in this. So you couldn't say that with a broad brush that private equity sort of are all about profit maximization. I think there's an optimization component to it, and part of that calculus is, if you want to convert it to money terms, how much is a happy patient worth? How much is a happy staff member worth? And what we're seeing in terms of transactions, we are actually seeing that being factored in terms of transactions. We're looking at longevity of staff, staff turnover, as perhaps even impacting valuations by even up to 0.5 or 1%. So I think that there's definitely those stakeholders now being considered, and I think even being engaged to a degree.
Yeah.
So it's just to reiterate, it's not necessarily private equity backed versus not. It's more kind of conceptually grasping important metrics of the practice and drivers of success long term, and not just optimizing for cash flow on a quarter to quarter basis effectively.
Yeah, it's certainly a much longer term sort of outlook than sort of your quarterly to quarter. But with that being said, the general view in private equity is you're only as good as your last financial statement, right? So you can't discount the importance of those.
Yeah, it's sort of like the unsophisticated oversimplification. But what you're saying is there are investors in this space or buyers in this space that are more sophisticated and do actually take a deeper dive.
Mm-hmm. Absolutely.
Yeah, Hendrik, as we're talking about, obviously profit, payer, provider, like in that kind of, call it tussle that exists in what's the best for the patient. What is the biggest difference you've seen with Australia and how it operates versus the US? Like, I'm not familiar with the Australia, like, just dynamic when it comes to healthcare. Like, is it just, national, kind of like it's just provided by the government? Is it truly privatized? Like, and how does that factor into how people get care in a country like Australia versus the US? And what have you seen as a major difference?
And how does consolidation compare to add to that list?
Okay, yeah. I'll answer Jinesh's question first. Healthcare in Australia is very much a two-tier system. Okay. So there is universal healthcare, which it's really designed to keep you alive. It's not designed to keep you comfortable. So if something threatens life or limb, that's when universal healthcare jumps in. But if you needed something like a hip replacement or a knee replacement that it doesn't threaten life or limb, it's uncomfortable, that's when you could be waiting for a long period in order to get your treatment. And then on top of that, there is a private element that goes into it, where you can buy your own, and for certain income brackets, you're actually encouraged to buy it. Otherwise, you do get penalized by paying extra into the universal healthcare system. And it effectively gives you access to, for want of a better word, jump the queue. So, if you did need something that didn't threaten life or limb, like a hip replacement or knee replacement, rather than waiting sort of 9 months, 12 months for that to be done, you could be seen in 2 or 3 weeks. So there's a combination of that, of both. We do have sort of the PPO sort of element, as well as traditional insurance, pays a percentage of your normal fee up to whatever maximum they might have. There is some HMO beginning to creep in there. So I think healthcare is largely delivered in the same way. You've got private hospitals, you've got public hospitals. Your particular access to both of those is really defined by your tier of insurance, whether everyone gets universal, but some people opt to pay additional for the private insurance, which, in the US, you consider it to be probably like Cadillac insurance. It'll cover things like aromatherapy. It'll cover, acupuncture and a few of those things that, might be somewhat questionable in terms of, efficacy.
Right. It's like a nice to have versus I need this to survive.
Yeah, I think the takeaway is, the universal healthcare is designed to keep you alive. It's not designed to keep you comfortable.
I appreciate that. And I think that's in general, like how I think most countries operate. And I think it's just one of those that dynamic, though, the fact that you have that 2-tiered, but at least a tier of system. And I don't know, maybe to Scott's point, how that impacts the business enterprise of Australia. Are there enough people out there looking for, that's that higher tier, and like, does that impact consolidation?
Well, I mean, there are people that I think that I don't know if there are people looking for it, but if you are at a certain income threshold, if you don't take out, and it's not a particularly high threshold, if you don't take out that private health insurance, you actually pay additional in tax, which almost comes to the same as paying the premium that you would pay on your private insurance anyway. You just don't get any of the benefit. So I think that there are people, more so than them looking for private health insurance, they're looking to not pay the tax. So I think it's the key driver is around, what's good for the person. If you pay the tax, you get nothing. If you pay the same amount for private insurance, at least you're getting something for it. There's some value to be derived.
Considered that, but that makes sense.
And where sort of along the consolidation spectrum does Australia fall?
Well, I think Australia is actually, it started off the consolidation. I think in terms of maturity, it's far more mature than the US. It's a situation where we've got publicly listed sort of DSOs in Australia. And then when we look at consolidation, there's sort of consolidation in sort of the roll up of, individual sort of dental offices into larger entities that are, backed by private equity or something similar, or even sort of dentists. And then there's consolidation around the roll up of dental offices, and then not just dental offices, but, other healthcare facilities that are actually owned by insurance companies. So you're actually seeing consolidation of dental offices and then the integration of those dental offices into sort of the financing of and delivery of that healthcare. And curiously, a lot of insurance company owned dental offices, they don't really target high profit margins. They're really looking for profit margins to make it look like it's a viable ongoing concern. But the dental offices are really utilized not as a true revenue stream or a profit center, but more as a tool to drive income premium growth. So a lot of these payers will say, well, we've got this network of dental offices and we can offer, at cost or maybe very, very small margin dental care to you, but you can only access it if you become a member of our dental plan, of our insurance company. So, what they're using it for is not to provide dental care, but to drive premium income revenue to the actual insurance company.
Mm-hmm. It's like it's kind of like a loss leader, right?
Yeah.
Get somebody into the store and you'll make your profits elsewhere.
Yeah, I mean it's when you consider the level of wastage which occurs with dental insurance benefits. I mean, like in the US, the estimate is only 3 to 5% of people ever max out their benefit yearly. So there's a significant level of wastage which sort of is associated with dental insurance benefits. And I think that's sort of the premise behind why there's that integration of financing delivery of dental care in Australia, with an understanding that there's going to be a ton of wastage. So there's significant sort of profit to be made associated with that.
Makes sense.
Interesting. Jinesh, do you have any other questions on the subject before we shift over to medical dental?
No, I like the medical dental question.
All right. Let's do it, Hendrik. Let's play out a scenario in your mind. What does the world look like? We'll call it 20 years from now, from a medical dental integration perspective. Does that involve in any way the insurance, medical insurance and dental insurance? Or do those two become intertwined in some way down the road, more so than they are today? I should say you've got the same company selling both policies, but they function very differently. Mm-hmm. What do you see 20 years out?
I think that the model that most insurance companies, both dental and medical, are moving toward is value-based healthcare. And I think that's the reality is that's what I would expect to come to the 4 in 20 years' time, probably even 10 years' time, to be honest with you. I sort of see it being based around the model of a patient-centered medical home, where you've got a primary care doctor that's providing, acting as a nexus and providing the diagnostic services and acting as that liaison between the patient and other various sort of specialties. And I sort of see dental as sort of fitting into one of those sort of either specialty or subspecialties built around that sort of primary care provider. So, and with the view that the basic premise of value-based healthcare is that our current sort of healthcare model, fee-for-service healthcare, for want of a better word, is that it creates a perverse incentive that the doctor gets paid when the patient gets sick, right? Which is not really great. The premise behind value-based healthcare is ultimately doctor gets paid for keeping patient healthy. So it's going to require a very, very big change in the way dentists are educated, the way even continuing education is provided, because it is a shift away from, the cure to the prevention aspect of it. And, insurance companies are a big part of that. That mean they love value-based healthcare. The rough sort of figures are that for every dollar that's spent on prevention, somewhere between $7 and $50 is saved on cure later on. So, insurers love it. And I think that there is going to be a more of an integration in terms of all the specialties or all the sort of disciplines, not just dentistry, with primary care medicine. Now, how that sort of gets divided up in terms of, who gets what for revenues, I think that's yet to be ironed out, simply because at the moment, the economics, particularly around, cost of education, costs of delivering care, don't really sort of suit value-based healthcare. But pretty much every major sort of insurance company has stood up committees to begin investigating how to move towards value-based healthcare.
Right.
I think FQHCs probably have a pretty good model to sort of, to start with. But
can you explain that, the FQHC model?
Oh yeah, FQHC model is built around a medical backbone. So you've got to have your doctor, your primary care provider, and then there are certain add-ons depending on the scope associated with that FQHC that might include dental, that might include mental health, it might include chiropractics. But the key thing is getting the patients in and actually seen in order to keep them healthy, rather than getting them in when they get sick. Mm-hmm.
So might the biggest driver of change be sort of this economic incentive for very large health systems to see the future savings by the dental, like I'll say a large DSO, mm-hmm. and then use that as a tool to effectively lower their cost of care delivery over a long time horizon?
Yeah, I think that's you've said it very well. I mean, I think that we're beginning to get some of those sort of ideas now, where you've got major universities beginning to sort of switch from Axiom, which is the typically used in a lot of dental schools, to Epic, mm-hmm. Which is probably the largest EHR in the country. Yeah. And then you sort of consider that a lot of EHRs, Epic, eClinicalWorks, Greenway have implemented dental modules within the EHRs, signaling there's an appetite for that integration of the dental into the medical. I think one of the challenges dental has is that dental practice management platforms were really designed as EHRs, and we're trying to now use them as customer sort of management tools, right? Sort of, right. I don't even want to sort of call them sort of anything more than that. It's sort of it's a list of names and birth dates. It's effectively what you get. There's very, very little that goes into it.
The irony is they're not even used properly as CRMs. There's so much information in them that could be used to kind of mature the patient population, and is not. So it's kind of like dead weight.
I mean, the customer relationship management side of things. I mean, there's no relationship. That's the thing. There's no relationship to manage through a PMS platform, versus with a medical platform, particularly with the health information exchanges that they participate with, Commonwealth or CareQual or something like that. It really allows that relationship to be created across all of the participating providers, whereas dental is almost like this weird little island where there's very little relationship to be generated.
Interesting. Jinesh and I talk about these news articles on various episodes, and a lot of what you're saying we've covered probably in the past couple episodes about. I think it was the state of Pennsylvania scrapped a lot of dental coverage that they provided in their government plan, and then found 10 years later, like, oh shit, those patients just became way more expensive for the state because those patients all ended up in the ER.
Right.
like
an obvious,
actually would have been less expensive to just give them a little bit better care in the beginning.
Yep.
And now you're basically playing catch up after having wasted a ton of money and made care much worse and people's health much worse.
Yeah.
So yeah, it's it seems like ultimately there should be this integration. I think I've always said I think maybe the biggest challenge is what you've touched on, the EHR / practice management software integration. You basically, to really, really oversimplify and dumb down the problem, is you essentially have two very disparate databases today, and they don't talk to each other, and there's no, there's zero communication from one to the other. And so you can't really do anything with that.
In the early days of medical dental integration,
I think we're still in the early days, but
I think integration was used very loosely, right? I think it was used. They'd said that, hey, if we can pull from one database a name, a social, and a date of birth, that's integration. That that was sort of where we got to, and I think particularly, like for the earliest integrations, Epic and Athena, two fairly large medical EHRs, were integrated in that way with Dentrix. So it wasn't a true integration where a medical provider could jump over and see the dental stuff, and a dental provider could jump over and see the medical stuff. It was the names, the date of birth, and the socials matched up. So that was the integration. There was nothing beyond that. I think at least now with sort of Epic's Wisdom module and sort of Greenway's sort of Sident modules, there is sort of that more integration or more sort of close integration with medical and dental, where providers can see the different sort of or the full healthcare being provided to that particular patient, notwithstanding sort of break the glass requirements for mental health. But I think it's allowing that a lot more now.
Yeah. Nice. Are you, Hendrik? Are you okay on time to keep going a little bit?
Absolutely.
Okay. Jinesh, did you have anything else on the MDI stuff?
No, I think to me, Hendrik, the thing that we keep bringing up, I think on the MDI stuff is, at the end of the day, one of the biggest shifts I saw moving from medical to dentistry was just on the way that they have to adhere to regulatory bodies. So I use the word compliance a ton, but there's more than just that. It's all about you have the Joint Commission to answer to. You have different kinds of insurances like the CMS to answer to that are then, it's different in terms of who your authority figure is and where the oversight comes from. And I think with that integration, you're going to have a little bit of confusion for dentists that aren't used to having a lot of audits or people step in their clinic saying, let me see how you're doing your stuff here, and giving you warnings and flags and saying you can't take insurance anymore, stuff like that. So I think that's beyond the EHR and just making sure that that's all operating correctly. I think it's just the fundamental how you operate your business and what is expected of you. Where do you see that in your mind in terms of that challenge?
Yeah, I mean, that all sort of fits in with that value-based healthcare, right? Having these, quality of care audits, having establishing quality management systems, establishing appropriate sort of steering committees. I mean, they're all designed to keep the patient healthy and prevent sort of rogue operators sort of, causing harm to patients, and really just trying to keep them healthy. So I think that, yes, it's, part of the value-based healthcare model does require this additional sort of scrutiny. Dentists, for the most part, have been able to sort of fly under the radar, and even basic things like implementation of the 21st Century Cures Act. Most medical settings required that to be implemented, whereas dentistry just got pushed back and pushed back and pushed back. I think it was like 4 or 5 years from its original planned implementation date, and I don't even think dental has quite got there yet. Myself speaking to a few dental PMS providers, I've sort of said, well, how are you guys going to implement the 21st Century sort of Cures Act requirements? They said, oh, we're not. We'll just wait to get fined and pay that. But chances are no one's going to come after us because we're too small.
Right.
So once you get rolled into medical, though, you become a much bigger target, right? So, a lot of those sort of regulatory requirements have to be met.
Yeah. So, Scott, I know we had one last question here on.
I have so many questions, but I'll try to narrow it, hone in here. Hendrik, you consult for a ton of different companies of very different natures. Even if I just look at dental, right? You work with companies that look and feel very different from one another. If we're to look at specifically tech innovation in the dental space, what excites you the most?
I think the correct answer is artificial intelligence, right? I think that's what's on everyone's mind, but I'm not as excited about it in the context of the diagnostic and clinical applications of artificial intelligence. I'm sort of more interested in the artificial intelligence utilization in data analysis, because the thing is, there's a ton of data out there, lots and lots of data, so much data that it's almost impossible for the average person to look through. And even if you consider something like marketing, right? We often sort of segment patients based on marketing. Perhaps it's the RFM concept, the recency, frequency, and monetary value. But what sort of artificial intelligence allows us to do is segment people even more finely. So those market segments become extremely thin, because artificial intelligence can see those patterns in those broad market segments that we can't. It's always been my sort of belief that the 80-20 principle applies, right? Sort of, it's all right, we can segment the market, and 20% of the market represents 80% of our revenue. Now, what if we could do 80%, 20% of that 20%, and then 20% of that 20%, and really just hone in on the sort of specific needs of a niche market group? And AI allows us to do that. It also opens up new market segments that we never thought might exist. There's a really nice AI product out there called Albert that sort of functions really well in that sort of space, in being able to sort of segment customers into different really, really finely sliced segments. So I really like the use of it for that. Certainly, the clinical applications can't be denied. I think that there's a diagnostic stuff that we're seeing, as well as some amazing sort of restorative / operative AI-driven innovations coming to market shortly. But in my mind, what really excites me is the data and analytics and business intelligence application of AI.
Nice, awesome. I know you had sort of a unique perspective, a chance to look under the hood at this is total tangent, by the way. Under the hood at Smile Direct before the train came off the tracks, or your analogy of choice. Can you give us a little insight there? Was this was this the sort of thing where a long time in advance you saw the writing on the wall? I mean, obviously there was this like super long history of litigation, and the company itself, it was almost like lawsuits were a strategy in a number of different ways. Do you have any unique insight that you think the audience might be interested in hearing on the behind the scenes at Smile Direct?
Yeah, I think that's a really good question, Scott. And fundamentally, the dental profession saw Smile Direct Club as a provider of clear aligners, right? Smile Direct Club really actually operated as a DSO in its very sort of clearest form. It was a DSO. it had a network of dentists, like licensed professionals, and those licensed professionals were charged a management fee. That's how it works. Basically, a very, very classic DSO approach. So, part of that management fee was that the Smile Direct Club would provide, I guess, HR services, legal services, marketing services, as well as lab services, which was the provision of the aligners. So, Smile Direct Club in and of itself was not necessarily sort of the aligner company. It was basically a DSO in its actual structure. So I think if you look back at it a little bit further than that, Smile Direct Club, now I look back at it in sort of with the benefit of hindsight, was really, it was a marketing company that happened to sell aligners. That's really what it was. When you look at their marketing spend, it was massive compared to their revenue, and so their cost of acquisition was just unsustainably high.
I mean, they were never ever profitable, right? Like,
no. Yeah, I mean, to be fair, there's a lot of sort of big companies that didn't really ever make profitability in that more tech space, and I think Smile Direct Club's biggest challenge was that the nature of its manufacturing is that it couldn't operate as a SaaS company like an Uber or a Lyft or something like that, which it took a long time to sort of reach profitability, but they needed to invest in significant physical assets and tangible assets. So not only were they sort of constantly having to put money into sort of research and development, put money into sort of customer acquisition, put money into sort of lawsuits and litigation, but they also had to invest very heavily in assets that depreciated very, very quickly. At one point, Smile Direct Club was actually the biggest 3D printer in the US. So, it's a significant sort of investment across multiple sort of use cases versus just throwing money into R&D, just throwing money into sort of G&A. There was significant sort of manufacturing costs associated. And I think one of the challenges that they had was that there was particularly after the listing, there was a expansion at all costs sort of mindset, which meant moving into markets that really couldn't sustain it. A classic example would be the New Zealand market. The population and total available market in New Zealand, no more than 2 to 3 million. There's just not enough people there in order to justify that investment. And there are other similar markets that simply couldn't be sustained. I think there was not enough due diligence done when moving into these sort of new markets. It was just, we've got to sort of drive revenue, and that growth at all costs mindset didn't allow for them to leverage economy of scale. So they couldn't necessarily adequately manufacture and utilize facilities in the US to service Australia, service New Zealand, service the UK. So it caused some issues there, and I think there was some issues with them being able to leverage network power, in that their network of participating doctors or supported doctors sort of was very variable. It sort of grew, it shrank. They were really never able to sort of articulate the value of the actual network itself. And then, they never could really overcome the incumbent power of, the 800-pound gorilla in the room, Invisalign, right? So Invisalign was that brand name and had that brand recognition. When people, I've yet to sort of, hear in my travels a patient go to a dentist and say, "Hey, I want Sure Smile, or I want Clear Correct," or
Sure.
It's always, "I want Invisalign."
Sure.
Now whether it's the dentist uses Invisalign, that's sort of not relevant, but it's the fact that Invisalign has sort of developed that incumbent power, similar to Kleenex, similar to Xerox.
It's a brand. It's the household name for sure.
Yeah, and then there was sort of elements around sort of brand power, right? In that Invisalign represented quality. Smarter Club represented something other than. So
low cost was their
yeah,
angle,
yeah.
right?
So yeah, there's some issues there.
On that note, I mean, obviously that turned into a fundamental strategy flaw, right? Like it seems like there were lots of different things that kind of added up here, and the right business decisions weren't made in sort of more focused areas. But it seemed like a fundamental flaw was choosing to go head to head with dental providers, like as an entire group in the country. It seemed like there was always this head to head, and they sort of tried like half-assedly to course correct, but just basically, they were punched and they punched back harder, and they never had the buy-in, I don't think, from the greater dental community. Thoughts around that? Do you think that was a big driver of ultimate failure, or is that just a distraction?
Yeah, well, I mean, I think that certainly played a part of it. I mean, you're getting punched from all sides, right? So you've got your litigation from from patients. There's litigation from Invisalign and
Dental
litigation
organizations, right?
from AAO. So you're sort of getting punched from all sides, and that litigation has cost.
Sure.
And it's also a distraction from your core business of of being a DSO or providing aligners or whatever you felt the core business was. I think that for the most part, the way that they treated or they interacted with dentists in and of itself didn't really have an impact, because it was very much a direct to consumer sort of model, but they had their network of dentists as they operated as a DSO. Mm-hmm. So the impact of the other dentists was marginal. So I don't necessarily think that their interaction with the dentists and perhaps not playing as nicely with the dentists was a big factor in it.
Interesting. It was noise until the legal fees became material.
Yeah, right. Yeah. I mean, we saw in its waning days there was a 400% increase in legal fees. So it was at some point the distraction becomes too much to ignore. But as those legal fees began to mount, and not just in the US, but in multiple jurisdictions, it really sort of distracted from the core business of keeping the main thing the main thing.
Right.
The main thing became defending sort of against litigation, rather than the main thing being, provision of aligners or supporting of their supported dentists or whatever the case may be.
Right. Interesting. Awesome. Yeah. Always interesting to do the post-mortem, so to speak, and hear different perspectives. A couple of fun questions to round us out here, if you're willing. Is there any advice in particular that you give on a consistent basis to your clients that's commonly or most commonly rejected or just not followed, and you want to kind of shake the client and out of frustration?
Yeah. So I'm a big believer. I'm a strategy guy, and everything is driven by strategy. So the advice I give them is: vision gives rise to mission, mission gives rise to strategy, strategy gives rise to tactics, and tactics gives rise to operations. And a lot of my clients are so operations focused that what they are strategically trying to say is that, hey, for example, we are the differentiated sort of option in the market. But yet from an operations perspective, they're saying, hey, I want to get the cheapest stuff I can find. I want to pay my staff the cheapest. I want to use the cheapest lab I can. So there's a disconnect between the overarching strategy and your operations. And that creates confusion in the mind of your customer. It creates confusion in the mind of your staff. And that old axiom in business is that a confused customer becomes somebody else's customer. So I think it's really always start with strategy and let strategy drive operations, never the other way around. As Sun Tzu said, strategy without tactics is the longest route to victory. tactics without strategy is the noise before defeat.
Well put.
We want to start asking people some just like fun questions about going to the dentist or getting your old healthcare. So if you're a dentist, it was, what's a fun question that you ask your patients while they can't speak back to you? But as a patient, and I think it's just more of like, what is your biggest fear of going to the dentist? And so like from a patient standpoint, because you're no longer practicing, like what is your biggest, like, I don't want them to do this, like touch my teeth and make it hurt. Like I have that fear, like of like that little pointy object that goes into my very sensitive area in my teeth. And I'm like, that hurts. And so like, that's my biggest fears. They're going to keep poking at it.
It's a funny question you asked. You asked that is that for 10 years, my dentist didn't know I was a dentist. So, he would come up and say to me, "Oh, would you like to learn about whitening, or would you like to learn about veneers?" And I'm going, "Sure, sign me up to your mailing list. Teach me about whitening and veneers."
Yeah.
But I think the advice that I would sort of have to dentists about what not to do is don't presume that every patient you have is low dental IQ or low dental education. You might be surprised.
Oh my gosh, yeah, I can see that.
That's pretty funny.
Yeah, I had that once. I mean, mine is not even close to yours, but like because I know about medical equipment and devices, like I was getting my blood work done for the first time in I think like 5 years. I'm not a great person that takes care of my own healthcare as much as I love healthcare, and I saw the machines. The calibration, because it's something I just know to look at, wasn't done but it was done 2 years ago. And so after they took the test or whatever, that just kind of was like, hey, how do you know that these things are accurate? Just kind of seeing where they would come from. Like, oh yeah, well we have, we run these QC things and everything. I was like, well, if you look at that sticker, it says that nobody's come to maintain this machine in 2 years. And she's like, oh, she's like, usually they just come in and do it for me. I just assumed it was done. I was like, oh my gosh. Like it's like one of those things where it's
the oil change sticker is like 10 years. It's 10 years past due.
I was like, take my blood again on that machine.
Yikes. Well, Hendrik, you've been an amazing guest. If there are folks listening that want to reach out to you, what's the best way to do so?
You can reach out to our email. That's Hendrik at Viturtal.com. That's HENDRIK at VITURTAL.com. Or come and see me at one of my speaking engagements. I'd love to have a chat with you.
Amazing. Hendrik, thank you so much. Everyone, this has been another amazing episode. Super excited we finally got Hendrik on. And that did not disappoint in the least. That was an awesome conversation. So, Hendrik, thank you so much.
Appreciate you, Jinesh. Thank you for having me.
All right. Cheers. Take care, everyone.
Take care.